Markets are on high alert this June, and it's not just about numbers. The rising geopolitical tension between Israel and Iran is sending ripple effects across global finance, causing sudden swings in both stocks and cryptocurrencies. In this video, we'll break down what's really happening in the markets, how investors are reacting, and what it means for your portfolio, especially if you're just starting to build one. Welcome back to the Cash Chapter, where we turn market chaos into opportunity. Let's start with the stock market. As of mid-June 2025, the S&P 500 is hovering around the 597 mark, showing a decline of just over 1% this week. That might not sound huge, but behind that number is a shift in sentiment. Investors are pulling back from riskier assets, especially in tech and consumer discretionary sectors, while rotating into more defensive plays like energy, defense stocks, and precious metals. Oil prices have jumped nearly 11% in just the past 5 days, thanks to fears that the ongoing Israel-Iran conflict could disrupt key oil supply routes in the Middle East. That fear is real because if the Strait of Hormuz becomes unstable, it could push oil over $100 a barrel, creating inflation pressure once again. Now let's talk crypto. Bitcoin briefly dipped below $103,000 after news broke of Israel's targeted airstrikes on Iranian military and nuclear facilities. The crypto market reacted with a sharp sell-off. Ethereum dropped below $2,400, and altcoins like Solana and Cardano lost up to 9% in 24 hours. So what's really going on between Israel and Iran? On June 13th, Israel launched a surprise operation, hitting over 100 Iranian targets in a single night, including military command centers and suspected nuclear facilities. Iran responded with over 150 missiles and swarms of drones targeting Israeli air bases and cities. These aren't just headlines, they're financial events. In wartime, markets get emotional. Safe haven assets like gold and the US dollar spike, oil prices soar, and stocks fall as investors flee uncertainty. The closer this conflict gets to impacting global energy supply, the worse it could be for markets. And if things escalate, we could see another correction similar to what we saw in April this year, when tensions between China and Taiwan briefly rattled Asia-Pacific markets. Let's talk strategy. For stock investors, now might be the time to reduce exposure to high-beta stocks and increase positions in sectors that typically outperform during uncertainty, like utilities, energy, and dividend-paying blue chips. For crypto investors, dollar-cost averaging into core assets like Bitcoin and Ethereum still makes sense. The worst time to sell is in fear, and historically, buying during dips caused by global conflict has delivered long-term gains. Also, keep an eye on Bitcoin ETF inflows. Institutional investors are quietly buying the dip, adding long-term support to the market even when retail investors panic. In short, June 2025 is a month of mixed signals. The markets are tense, but not broken. Crypto is volatile, but not collapsing. And the Israel-Iran conflict, while serious, has not yet triggered a global financial shock. But the situation remains fragile, and that's why this is the time to stay informed, not impulsive. Whether you're investing with $100 or $100,000, your greatest asset is clarity. So stay focused, stay diversified, and remember, long-term wealth is built in moments of fear, not hype. If you found this breakdown helpful, hit the like button, subscribe to the Cash Chapter, and turn on the bell so you never miss a financial update that actually matters. Drop a comment below. What's your take on this market shakeup? Are you buying the dip or sitting on the sidelines?